Welcome to the Deep Dive. We're the show that tries to cut through all the noise, the overload, to bring you the clearest insights from, well, stacks of research. Today we're really diving into a question that's sparking a lot of debate. It's everywhere in the digital asset world. Is the Ethereum's current liquidity surge? Is it just a temporary bounce back? Or, and this is the big one, are we seeing the first real signs of it challenging Bitcoin for the top spot? We've pulled together quite a range of sources for this deep dive market analysis, raw on-chain data, expert opinions, the whole lot, all to help us and you understand what's actually driving Ethereum right now.
Exactly. And our mission really is to help you navigate all these complex signals, separating the actual signal from the noise. We're not just going to lay out what's happening with Ethereum. We want to clarify why it's significant and, crucially, what it could mean for the whole digital asset landscape. It's about giving you that vital context, that bigger picture.
Absolutely. And, right off the bat, the analysis we looked at points to something, well, pretty compelling. It doesn't seem like just speculative buzz around Ethereum this time. There feels like a deeper, more fundamental thing happening. The data seems to suggest a kind of structural reduction in its supply happening at the same time as sustained demand. And this is creating what the experts are calling a compressed chart setup. Apparently, that's a pattern that often comes before a major breakout.
Yeah, and what's really interesting is how the on-chain analysts are reading that compressed chart setup. They talk about it as a period of energy accumulation.
Yeah.
Think of it like a big spring being coiled tighter and tighter, building up potential energy. And these are exactly the kinds of conditions that historically tend to precede those really high volatility, explosive market moves. So we're looking past just the daily price swings here. We're seeing potentially a fundamental market dynamic winding itself up.
That coiled spring idea. That paints a really vivid picture. So what are these structural shifts the sources are talking about, the ones creating this potential? Especially, you mentioned after Bitcoin ETFs get approved, sometimes big institutional money starts looking at Ethereum next. What's making ETH the target now?
Well, the shift within Ethereum itself is pretty profound, and it's documented across the sources we looked at. They really highlight the ongoing impact of EIP 5559. That's the Ethereum Improvement Proposal, basically a big network upgrade. It fundamentally changed how transaction fees work. The key part is, after EIP 55559, a bit of the fee gets burned with every single transaction, permanently destroyed. We're talking hundreds of thousands of ETH just vanishing from circulation every year, gone. And then on top of that, you've got the staking rate. It's now over 27% of all ETH. That effectively locks up a massive slice of the supply, taking it off the open market.
Okay, so if I'm getting this right, Ethereum is actively reducing its supply while Bitcoin's supply is just fixed. That sounds incredibly bullish on the surface. But are there downsides? Any, counter arguments or risks to this whole deflationary by design thing the sources bring up?
That's a really important question. And yeah, the sources do touch on that. While shrinking supply is generally bullish, the main risk they talk about isn't really a flaw in the deflation itself. It's more the potential for things like, say, ownership getting too concentrated, or maybe network activity slowing down if fees growing excessively high, which could, counteract the burn effect. But the overall feeling in the analyses we saw is that demand seems strong enough to handle these changes, and that the benefits of that scarcity mechanism seem to outweigh those sort of theoretical risks right now. This whole mechanism is really evolving ETH into what they're calling a deflationary currency by design. It's different from Bitcoin's fixed cap. Ethereum can actively reduce its supply while demand potentially keeps growing. So what this means for you, the listener, is potentially a shift in its basic value proposition. It suggests ETH could behave less like just a speculative bet and more like perhaps a long-term store of value, maybe even an inflation hedge because its scarcity increases over time. That's a really powerful and pretty unique characteristic. It definitely sets it apart.
Yeah, that is a major shift in how you might think about its core identity. But let's get deeper into the expert analysis side. What does this look like from an on-chain perspective? How do the analysts read this unique supply-demand thing?
Right, so the on-chain folks describe ETH staking, using this term, a yield lock model. It's not just about earning yield, but that's part of it. It actively suppresses sell pressure. People are incentivized to lock up their ETH, right, to earn that yield. And that crucially cuts down the amount that's readily available on exchanges to be sold. It creates a kind of scarcity that's hard to overcome quickly because people are choosing to hold and earn, not sell. And then connecting this to the bigger picture, this is fascinating. The research draws an analogy from physics.
Yeah.
They explain how these patterns you see in ETH's chart, this bandwidth compression and expansion, they actually mirror something called critical point bursts in physics. Think of like water building up pressure behind a dam,
Right.
accumulating huge pressure before it suddenly bursts through. Or maybe like stretching a rubber band really far back. These kinds of phenomena in physics, they're known to lead to really explosive trends. It's just the market isn't just sitting still. It's building up this immense potential energy, preparing for a potentially significant release.
So it sounds like we're maybe moving beyond just looking at a price chart that might wiggle up or down. We're potentially observing an energy accumulation phase that, surprisingly, physics suggests could lead to pretty big, maybe even explosive moves, like the market's getting ready for a preloaded jump almost. That makes a lot of sense, especially framing it with that analogy. But is this just an ETH thing, or are there, historical parallels, maybe in other assets? Does this formula reduce supply plus expanding demand? Does it reliably lead to steep rallies elsewhere?
Yeah, that's a fair question. And yes, the sources do offer some pretty compelling comparisons that shows this isn't like a totally new idea. Take gold, for example. The analyses point out that gold tends to rally explosively only when you get significant supply constraints meeting a real surge in demand. They describe that situation as similar to ETH now. Even gold, the classic store of value, often needs that kind of supply shock plus strong demand to really ignite and see that kind of exponential growth. And if you want a more modern example, right, from the crypto world itself, look back at the 2021 NFT boom. That period is actually a perfect concrete illustration. During that time, the ETH supply shock was huge. So much ETH was locked up buying NFTs used in DeFi.
Right, I remember that.
Exactly. And that scarcity, hitting that intense demand, it pushed the price up from around $3,000 to $4,800 really fast. It wasn't just hype. It was a direct result of sudden, massive demand meeting a supply that was increasingly locked up and unavailable. It really shows the power of these supply shocks.
Okay, so whether it's traditional assets like gold or recent crypto history like the NFT craze, there's a pattern here. When you get real supply reduction meeting growing demand, it seems to consistently spark these sharp, fast rallies. It almost feels like a kind of underlying market formula for explosive growth, right? That adds a lot of clarity. Expert, if you had to sort of bring all this together, the structural supply changes in ETH, the on-chain stuff, these historical examples, what's the big takeaway for our listener? What does it all point to for Ethereum's current position?
Well, if you connect all those dots, the combined evidence really points strongly towards Ethereum's current situation. The liquidity, the chart position reflecting what the analyses are calling calm before the storm conditions. It's presented as, much more than just a simple bounce off a low. It looks like a robust, kind of multi-layered setup for what could be a sustained and potentially quite significant rally. The groundwork, like you said earlier, seems to be really well laid. All the pieces potentially aligning for something substantial.
It definitely sounds like the groundwork is laid for something big. But, when we hear calm before the storm, sometimes that can feel a bit like a market cliche, right? Do the sources offer any, strong caveats, conditions where this storm might not happen? Or is it presented as almost a sure thing?
That's a really good point to raise. No, the analyses don't frame it as 100% certainty. It's more of a high probability scenario based on these patterns and the current data. The main ifs would be something like a major unexpected drop-off in demand, or perhaps a sudden huge unlocking of staked ETH flooding the market, neither of which seems likely right now, according to the on-chain data they presented. They really emphasize that if the current conditions hold, the corrections stay shallow, volume remains consistent during this consolidation phase, then the probability stays quite high. So yeah, no guarantees in markets, ever. But the indicators are lining up in a remarkably strong way.
Okay, that's a helpful bit of perspective. Good dose of realism there. Now, beyond the charts, beyond the data, there's always the human side, isn't there? How does an individual investor deal with these calm before the storm times? They can feel really uncertain. The sources actually introduced this fictional investor, Mr. A. Can you tell us a bit about his story?
Yeah, Mr. A's story is, I think, super relatable. He, like maybe a lot of people listening, used to just assume ETH followed Bitcoin, like a little brother tagging along. But now he started looking deeper. He saw the on-chain data, fewer coins actually going onto exchanges, more and more ETH getting locked into staking, and he started to think, this time it actually feels different. His journey really highlights how important it can be to look past just the daily price ticker and understand those fundamental shifts happening underneath, the supply and demand story.
Yeah, I think many of us can definitely relate to Mr. A there. It's so easy to get swept up in the day-to-day noise, the price swings, that immediate gut reaction. So what advice do the experts give for managing your mindset during these pre-breakout phases? Because honestly, they can be pretty stressful.
Well, what's interesting is the practical advice they offer specifically on mindset during these times. The sources definitely acknowledge that these consolidation periods before a potential breakout, they are stressful. It's easy to get impatient or second-guess things. But drawing from the analysis, the advice is basically if the corrections are shallow, meaning the price isn't crashing, and if the trading volume stays reasonably steady, which suggests ongoing interest, then patience often pays off. It's a strong nudge to trust the underlying data, the longer-term trends, rather than just reacting emotionally to every little dip or spike.
That's a really solid practical takeaway. It's about discipline, isn't it? Trusting the underlying data like the on-chain stuff Mr. A saw, which can tell a very different story than just the immediate price action might suggest. Okay, so wrapping up this deep dive, we've really covered a lot. We looked at Ethereum's evolving, truly deflationary nature, that unique burn mechanism, the high staking rates. We unpacked the yield lock model and how it keeps sell pressure down. We even touched on that fascinating critical point bursts idea from physics, suggested this buildup of energy, and we grounded it with parallels, gold's rallies, the 2021 NFT boom, all pointing towards this potentially significant calm before the storm for Ethereum.
And, it's not just the detailed analyses saying this. If you connect it to the wider conversation happening out there, our research found similar themes popping up. You hear chatter like, is Bitcoin's dominance actually starting to wobble? ETH looks ready. Or people speculating if they get a big institutional nod like another ETF, this thing could really fly. There's even this recurring line, the chart looks so clean, it's scary, which speaks right to that strong technical setup we've been discussing.
Wow, that's quite something when the broader community sentiment aligns with the deep data. It's like the market itself is whispering. And the analysis even offered that striking analogy, didn't it? Like David facing Goliath. ETH might be on the verge of toppling the crypto giant. That image really sticks with you. It captures the scale of what can be unfolding.
Yeah, look, all the signs based on this deep dive into the data and the expert takes, they seem to be lining up. But at the end of the day, the decision on how to interpret this, what to do with it, that's always yours as someone watching these markets. Our goal here is just to give you the most thorough, impartial look at the information we could find.
Absolutely. So we really invite you to take these insights and continue your own exploration. Is Ethereum truly the next big wave, ready to challenge the old guard? Or maybe you're seeing another contender out there, something we haven't even discussed. We'd love for you to think about it. Based on everything we've unpacked today, what really stands out to you about Ethereum's potential right now?